question which Fazil has asked from BPP kit. It says that new market company's revenue as shown in its draft statement of profit or loss for the year ended 31st December 2009 is 27 million. Now it says draft statement, so it is the first version. They are preparing it, so that's the first version, not the final. And revenue is written as 27 million. This includes 8 million for a consignment of goods sold on 31st December 2009, on which new market company will incur ongoing service and support cost for 2 years after the sale. Okay. So we know that in 8 million for consignment of goods, and it includes service and support costs for the next 2 years. The supply of the goods and the provision of service and support are separate performance obligations under the term IFRS 15. So that's exactly the scenario which we discussed in IFRS 15 lecture, the first lecture, when you sell a car for 30,000 and you provide 1 year or 2 year or 3 year service. And we established that this 30,000 is not only the price of the car, but it also includes the value for providing services. And if you remember from the lecture example, we assumed that 27,000 is the price of the vehicle, 3,000 is for the service for the next 3 years. So when you sell the car, you only recognize 27,000 because you have delivered one performance obligation. Once one performance obligation has been met, so you can record 27,000. 3 year services have not been provided, so you cannot record it immediately. Service revenue you will record as the time will pass. So that was the logic for that. So in this particular scenario, 8 million is the total cost, and it does include 2 years of service. The first thing we want to find out that we want to split this 8 million revenue between the sale of good and the provision of services. How much out of this 8 million, how much is for the goods and how much is for the services? Now it says that the cost of providing service and support is estimated at 800,000 per annum. New market company applies a 30% markup to all service costs. At what amount should revenue be recognized in the statement of profit or loss of new market company for the year ended 31st December 2009? Ignore the time value of money. So 800,000 is actually cost, and they charge 30% markup. So 8 million, now you should pay attention that 8 million is the sales revenue. 8 million is the revenue figure. 800,000 is not revenue figure. 800,000 is cost. So what is the selling price of this service? 800,000 multiplied by 1.3, which is markup. How much does it give you? Yes, please, Fazil. Do you have a calculator? So 800,000 into 1.3, 30%, 800 into 30%, 240. 1,040,000 is for service for 1 year. For 2 years, it becomes, 1,140,000, 2,080,000. 2,080,000 is for the service revenue. So if you subtract 8 million minus 2,080,000, what do you get? Give me the numbers quickly. So you've got 8 million and you have to subtract, and let me write down like this, and you have to subtract 2,080,000. Subtract it.
5920.
5920. 5,920,000. This is your goods, okay? These are your goods. These are your services. This immediately will go into P&L and this will not go immediately. We will see that how many months of service we have already provided. This is for 24 months, okay? So when did we sell that? Sold on 31st December 2009. And you are preparing on 31st December 2009. So it means that nothing can be realized because you have not provided the services as such for now. Because if you had sold it on, let's suppose, sold goods on 1st of September, so I would have said September, October, November, December, 4 months passed. I would say that, 2,080,000 is for 24 months. I would divide it with 24 and multiply it with 4. So 4 months of revenue I would have recorded. I would have said 5920 plus this number. This is sale of goods, and this is the sale of revenue, a provision of services revenue. But in this case, they sold the goods on 31st December and they are preparing financial statements on 31st December. So it means that so far we have not provided any services. So service revenue will become zero. You don't have any service revenue. You will only record this one, sale of good. Any question you want to ask?
Sir,
So you have a total annual revenue of 27 million, and 27 million includes 8 million. So actually 8 million you should not be recording. You should be recording only 5.9 million. So this is extra. This is extra recorded. So just subtract it from there. So 27 million total revenue minus your 2080, whatever it is, 2080 service revenue you cannot recognize. So service revenue you will subtract, whatever will come, that will be the answer. And then you might be thinking that how did we get this 1040? See here, you need to be careful with the wording. It does not, it says that the cost of providing services is 800,000. So this is cost. So what would be the selling price? Because in 27 million is the selling price, 8 million is the selling price. This is cost. I have to find out the selling price. And because it says 30% markup, markup means 30% on cost, which means 800,000 plus 30% of 800,000. This is how you come to the selling price. Okay. That will, and you can simply otherwise do it, 800,000 multiplied by 1.3. It is the same thing. Either you take 800 plus 30% of the cost, or you simply multiply with 1.3. You get the same answer, 1040. 1,040,000 is the selling price, is the revenue from services for 1 year. And because there are 2 years, so we just multiply with 2. And we say that within this 27 million, 8 million is included. And within this 8 million, 2,080,000 is service revenue, which I should not be recognizing now. So let's just subtract it because we already have added it before. We unduly added it. We should not have added that. So let's subtract that. So 27 million minus 2.08 million. I think whatever 25, 24, you will get answer. Okay.
okay, sir. Got it.
Good. It says that Durango company also sells package which gives customers a free laptop when they sign in a 2-year contract for provision of broadband services. Sells a package, internet package, which gives customers a free laptop when they sign a 2-year contract for, okay, so if you sign for an internet connection for 2 years, you give customers a free laptop. Such a nice company. The laptop has a standalone price of $200. So this laptop otherwise cost 200, but they give it free of cost to those customers who sign 2 years contract. And the broadband contract is for $30 per month. So 2 year mean 24 months, and they are charging $30 per month. So it means that 24 months multiplied by $30 per month, 24,372. So if you sign a contract for $720 worth of services, you get $200 of free laptop from the company. Now, in accordance with IFRS 15 revenue from contracts with customers, What amount will be recognized as revenue on each package in the first year? Select the correct answer from the options below. Okay. Okay, this is a question about discount allocation. We have discussed discount allocation before in lectures as well, but let's do one question. So we already have read that the company says that you buy internet. Internet cost is $30 per month. And if they buy it for 24 months, 24 months means 2 years. In this case, what they do, they give you a laptop. And laptop has a price of 200, but they give you for free. So it means that customers will get internet for internet plus laptop together. But customers do not pay for this laptop. Customers will pay what? Customers will pay only for the internet, which is 720. So it means that effectively there is a discount which has been given to the customers. And if we consider that what is the discount percentage, we would see that 200 divided by total. So total price should have been 920, but customers are paying 720. So they are getting 200 discount over an invoice value of 900. So it means that it is 21.7% of something. You can call it 21.7 or 21.22. If you make it 22, your answer would be wrong. I prefer that you do it 21.74%. Okay. This is the discount which you are giving to the customers. And now we have to recognize the revenue. Recognize the revenue as performance obligations are met. And they ask you that revenue in the first year. So what happened in the first year? The day when somebody signed the contract, you gave them the laptop immediately because that was part of the deal. So you gave the laptop immediately, which has a value of 200. And then you provided them for the first year, you provided them 12 times 30. This is the value of service which you provide in the year one. So actually what you delivered is 200 laptop and 360 the service, but you should be recognizing it with the discount percentage. Okay, you have a 21.74 discount percentage. So if you apply that discount percentage here, let's suppose like this. So how much discount you are giving? So this is actually, we are giving this much of discount. So net revenue will be this one plus this one and this one, and you make a total. It should be 438 point something. So you have got 439 answer. If I just try to round it up or round it down, it is 438, 439, because I took 2.74 or something. It might be a little bit more, but 439 should be the answer. You are actually giving 21.74% discount. It means that you are receiving, 100 minus 21.74. So what you are actually receiving is only, how to say, 78.26%. You can do like this also. You can say that this is the total revenue, but I am receiving 0.7826. You can just take 78.26. It's either way, okay? It's the same. So when you make a total again, you get to the same number, 438.256, which is there. So either you subtract the discount, like I said this, or you write down what you actually receive. Effectively, you must be reducing the value with 21.74. Okay. So laptop was given in the beginning, the entire laptop. So we put the full value of laptop 200 on day one. But services, we did not charge, the total value of service is 720, but we record only 360 here because it is for the first year. For the second year, if they ask you that what revenue would go in the second year, okay, they are not asking you. Let's suppose they ask you, you would say 36 into this. Only in year two, you will record this number 281. That's all. The second year, because laptop is gone, in second year there is nothing about laptop. Second year you will only provide services, and services value 360, but there is a discount and 281. If they ask you, they did not ask you. So this is your revenue in year one, which is your correct answer, and this is your revenue in year two, if they had asked you. If I make a total of this, it makes me 720. This is what you agreed with customers. What did you tell customer? Pay $30 for the next 24 months. So this is 30 times 24 is 720. So this makes it 720. You can make a check. If your calculations are right or wrong, you can just double check your calculations are right. It is $720 approximately. Year one revenue 438, year two revenue 281. Are we clear on that?
Yes, sir.
Good.
Clear.